Wow, what a wild week. The Federal Reserve met, interest rates dropped suddenly without them cutting, and the equity market is selling off hard. What the heck is going on? Let's find out in this week's Mortgage Market Update. Now, let's get right to it. Last Wednesday, the Federal Reserve met and Mr. J. Powell and friends decided to keep rates unchanged once again. It has now been more than a year since they last hiked rates back in July of 2023, maintaining their restrictive stance. Markets widely expected no cuts at this meeting, but they were prepared for strong clues or words that a September rate cut was indeed imminent. Within the Fed's monetary policy statement and subsequent press conference thereafter, Fed Chair Jerome Powell led the world to believe that conditions are getting ripe for a cut, but more good readings on inflation are necessary. With the next Fed meeting 6+ weeks away, there will be multiple inflation readings and jobs reports to validate whether a cut in September makes sense. Well, we sure didn't have to wait very long, as the Bureau of Labor Statistics, or BLS, jobs report for the month of July came in surprisingly weak. 16 of 19 Fed members did not see the unemployment rate rising above 4.1% in 2024, yet we saw an increase in the unemployment rate to 4.3% in Friday's jobs report. The BLS also reported that there were only 114,000 jobs created in July, which was well below the estimates of 185,000. There were also 29,000 in negative revisions to the previous 2 months. The U6 unemployment rate, which does not remove people that have not been looking for a job for more than 4 weeks, among other things, rose from 7.4% to 7.8%, also the highest level since October 2021. The question now is if the Fed has held on for too long and is pushing the economy towards recession. This, among other reasons, including the yen carry trade unwinding, is pushing the stock market and equity prices down dramatically. All of this could indeed be the golden ticket for forcing the Federal Reserve to finally begin cutting rates. Another reason to be very optimistic about interest rates and housing is the trend we are seeing. Now, looking at this chart, last year from April through October, mortgage rates steadily climbed from 6% to 8%, making higher rates and higher lows over time. This year, interest rates have steadily improved since April, making lower lows and lower highs over time. For instance, the 10-year note peaked last October at 5%, then made a series of lower highs at 4.75%, 4.5%, 4.35%, and recently at 4.2%. Today, we are now sitting all the way down at 3.82%. If this trend continues, we should expect even lower rates ahead. There's so much on the plate we could talk about that is driving the markets, but my time is limited. Of course, I am always happy to have a one-on-one discussion on how this affects you and your financial goals. Feel free to reach out and schedule a no-obligation chat, would you? Bottom line, interest rates continue to improve as inflation declines, the economy slows down, and the unemployment rate rises. The trend for lower rates should continue if these trends continue, but it will not be in any sort of straight line. Volatility is the name of the game now. Now, looking ahead, this week is a slower news week, but we do have a fresh round of Treasury auctions. Buyers will be asked to purchase bonds that are now at lower interest rates than what had been over the last couple of months. Will the recent good buying appetite remain at today's lower interest rate levels, or will investors demand more yield? If the latter takes place, home loan rates will likely edge a bit higher. We will also be listening for what the Fed officials have to say about monetary policy and the likelihood of a September Fed rate cut. Right now, the markets are pricing in an 84% chance of a 0.5% rate cut at that time, which mortgages and treasury yields are reflecting today. Now, as we wrap things up, here is a peek at current mortgage rates to start the week. Feel free to hit pause for the details. And as always, thanks for hanging with me for this week's Mortgage Market Update. Be sure to like, comment, and share. I'm always here to help, and I look forward to funding your future. Have a great week.